Hello and welcome to another update video about VeChain. On the VeChain chart, we are still watching for a potential start of a third wave rally. The idea is that the price formed a 5-wave pattern to the upside, which topped in February or maybe even early March this year. It can be debated where this 5th wave finished. And in the grand scheme of things, it doesn't really matter if it finished here or here. The idea is that after this first 5-wave move topped, a 3-wave decline followed in a WXY structure. It can be counted differently. Therefore, we need to be on the side of caution, and it could still drop lower. The support region allows for further downside if needed, down to 2.2 cents or even 1.8 cents. So the 1.8 cent level is, let's say, the last reliable support level here. And then we have here down there at 1.34 cents. I mean, this is the invalidation point. This is the invalidation point down there. We can highlight that as a red line. 1 second. We can highlight that as a red line. And the market needs to hold above it in order to keep the bullish upside expectations alive. The price now reached the previous wave 4 low. Oftentimes we tend to, we see that a wave 2 tends to finish in the area of a wave 4 of one lesser degree. And that would be here in this region now. So I'm definitely watching for reversal signals, but haven't seen anything that is substantial enough. Pretty small upside, let's say, reactions down there in that region here between the 50% and the 61.8 retracements between 2.69 cents and 2.28 cents. What are we watching for? I mean, it can still go lower, right? Because in case the wave count is slightly different to the downside, it could be, it could be A, B, C instead of WXY. Because with the WXY, at any point, the low could be in. But if it's an ABC structure, then the C wave should be a 5-wave move. Now, I can't see 5 waves. So it is possible that we are looking at that as maybe wave 1, wave 2, and then A, B, C, and 3, 4, 5. It could easily get another lower high. So the purpose of this white scenario, and I don't like how this 1-2 looks, but the purpose of the white scenario is to remind us that we might see another low. And the purpose is also to give us a resistance area that we can use to determine when a low is likely in. So we use for that the standard resistance for a 4th wave, because again, we could be in a 4th wave now, but we have to add the 61.8 retracement because the decline seems to be a diagonal. So as long as the price stays below 3.67 cents, we could easily get another low. In simple words, it means if we break above resistance, above 3.67 cents, it indicates more strongly that a low has formed. And this would therefore be the first key breakout point. It's also the previous B wave top at 3.67 cents. So it's one of these key levels. If we break above it, it's further, I think, solid indication that a low has actually formed in wave 2. Until then, we are watching for a micro 5-wave pattern to the upside. But at best, this is unclear because of the double bottom, but this would be at best, I don't know, a 1-2 or something. Not even. It looks like a 3-wave move up. It's unclear. It's too small to be reliable. And therefore, we need first 5-wave move up above resistance. Okay. Now you can track local patterns. It broke a trend line here. If that's enough for you to jump on board, do it. But from an Elliott wave point of view, I can't confirm a low yet. Would prefer to see that 5-wave pattern above the resistance area. Until we break above resistance in 5 waves, one more low shouldn't be a surprise. And it still has plenty of space. That's my update about VeChain. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.